If you're one of those lucky enough to have a pension and live in Texas, count your blessings. But with pensions come choices. The RetireMax Texas Pension Analyzer tab is designed to compare different options within a pension plan. Use this tab to cleanly illustrate the differences between multiple options and help your clients maximize their cash flow while protecting their heirs. The Texas Pension tab illustrates the Texas retirement system. You can input a tax bracket to illustrate the net retirement income. Other input cells are self-explanatory. In this example, age at retirement is 60. Total years of service is 30. Highest average salary is $50,000. The retirement gap is the difference between the percentage of pension income and 100%. This equals the gap. The number shown is 31%, meaning the pension will provide 69% of the $50,000. The next section illustrates the standard pension and the partial lump sum, or PLSO, annual and monthly numbers. PLSO months can be 0, 12, 24, or 36. This is the number of months' worth of PLSO money that will be received. The state factor is the percentage factor used in the retirement benefit formula, which is average compensation times the state factor times years of service. Health insurance cost at retirement is, let's say, $300. The PLSO interest income cell is used to illustrate a percentage of the partial lump sum to be used as income for the retirement income comparison section. We'll use 5%. We'll put 10% for the joint survivor cost. This cost can vary depending on which beneficiary option is selected. The exact cost can be calculated from the State Retirement tab. The Retirement Income Comparison section illustrates net retirement income after expenses and taxes, comparing the partial lump sum option to the standard pension option. The two rows just below the joint survivor cost row are income cells that can be used to show a total income scenario. I'll name the first one IRA, showing $100,000 and $500 per month income. And the second row I'll name Social Security, showing $1,000 per month income. The tax-free income row is reserved for monthly income that will not be taxed. I'll put $500 here, anticipated from my Roth account. Notice the net income between the two scenarios. PLSO equals $3,411, and the standard option is $3,674. The difference is a little over $250. That's the difference to receive a PLSO of $103,500. Current total net monthly income is the total net income of the client and spouse. The percentage loss of income is the gap ratio of current net income to net retirement income. The next row shows PLSO information. The PLSO accumulation value section illustrates the PLSO and additional monies projected at future values based on expected time of use and how those values would affect income. We know it's a lot to think about. And just think about how your client is feeling right now. Pension decisions deserve more than a yellow pad and a guesstimate. The more you use this tab, the more you'll love it. Unless you don't work in Texas, in which case you won't. And your Texas clients will love that their retirement net actually matched up with what their advisor told them. Get ready for lots of referrals.